All right. Hey, good morning, everyone, and welcome. Thank you, as always, for joining live. I know everyone's busy and trying to get stuff done before it rains again, so we'll jump right into it. All right. Sitting on your screen here is Kansas City wheat. About 6:30, about 6:30, between 5:30 and 6:30, wheat just kind of started moving higher. Early this morning, it was trading flat to a little bit lower, and it looked like, oh gosh, we're gonna have more follow through selling, and we're gonna grind this thing lower again. But then India announced that they were going to start restricting wheat exports, and so they took off a huge amount of supply off the table from the world. So our market just started responding, and we're now we went from flat to up 37 here pretty quick. So I think wheat is a little bit tricky, but let's talk through it here, okay? So we've talked about this for several weeks. We've been following and are really liking this indicator called TD Wave. It's Tom DeMark's Elliott Wave version. And it's not a perfect Elliott wave count, but there's been no other indicator that we've been following the last year and a half that's been more accurate than this one. And you gotta appreciate that indicators are all designed to operate best in different circumstances, and you just got to keep an open mind and look at which one is working the best and kind of rely on it. So this one has been working really well. And what I want to look at are the blue numbers, because what they tell you is what direction the most likely the most probable move is. And we move in 5 waves, okay? We go one up, 2 down, 3 up, 4 down, 5 up. That's always the sequence. But then after a 5, it's followed by an A, a B, and a C. So when you look at this, you could say, hey, we're in a C, we're starting a wave C, and in order to complete it, we have to take out the lowest close of A, okay? So we've got to trade all the way down here to get a C. But here's the thing about this indicator that we've learned watching the shorter term charts, is that these wave 5s are really, really hard to kill, because when you're in a wave 5, you're in an established trend, and established trends are really hard to finish. So when you look at your shorter term wave structures on wheat, and I'm not going to dive into that today because I think we'll get lost in the weeds and spend our whole time on it. But if you look at the shorter term wave structures and analyze this move here from the bottom to the top, what we're actually in is a 1-2. And so what's going to happen likely is that we're going to blow on up to new highs, and this B and A are going to go away, and this 5 is going to move over and just keep extending higher. So that's a viable count. That's why we watch multiple time frames, and I think that that's the most probable move. And I think that move is supported by the fundamentals, because the crop in India is just absolutely burning up. The crop here is not in great shape, right? We have very few acres relative to history, and we have the worst conditions that we've ever had, or right at them. So I don't think that we're going to pressure and come down and get a C. It's possible, but probably not likely at this point in the game. And I think that's also confirmed when we start looking at corn. You look at these other indicators down here, and there's been no divergences. We're right in buy zones, and so this is ripe to turn around and pull back. If you look at this move, let's go Fibonacci retracement. If you look at this move from the low right here, look how much we've retraced. We've retraced right at 50%, which is, anywhere in this zone is the sweet spot. So this is a perfect spot for wheat to turn around and start moving. And it just needed a catalyst, and it definitely looks like we got it. Limit on wheat is 75 today. And so I wouldn't be a bit surprised if we hit that, and then who knows where we'll go. So I think we got to turn around and look higher in the wheat complex, and I think that our old highs are going to get blown away, and we're headed up higher. Where are we going? I don't know. So let's do our best guesswork and realize this is a guess, right? Nobody knows when you take out all-time highs where we're going to head. We're going to have this conversation with corn too. So if you measure from here down and snap a Fibonacci extension tool on here, where are we going to go? Well, here's your targets. First target is 1358, second is 1420, third and most likely target is 1584 to 16. And then if we get really crazy and exuberant, we could see wheat trade somewhere between 16.90 and 20 bucks. I know that's insane. I know that's a completely crazy number, and you don't want to count on it. Like, don't hold out for that necessarily, but it's possible. And what's the major wild card outside of drought? Well, it's Europe, right? It's the fact that we've got a lunatic in charge of 40% of the world's wheat supply, and we don't know what he's going to allow to happen. So something like that could occur here, especially if corn goes nuts. So with wheat, I know everybody's antsy to layer in more sales and get things lined up for a harvest. I also know that everybody's super nervous about what they'll actually yield, because it looks to me like yield is probably shrinking even with rain coming. It may be too little too late, but so I think it's important to sit back and let the market really work its magic. If we get above this 1202 level, then I think it's almost a given that we come up to 1260 and on up higher. If for some reason we turn around and fail again, and we take this low back out, then likely we're going to come down and get a C. But I think that's unlikely at this juncture. All right, let's talk about corn. Everybody's nerved up about corn, and we probably should be because of yesterday's trade action. But here's the deal. I'm going to take this off. But here's the deal. We talked about corn a couple weeks ago, and we said this is the same chart I drew then. We said, hey, if we look at this move and isolate it from the March 29 low to the April high, and we analyze the move down, we can give up ground all the way down to 740 on the July corn contract and still not really do any major chart damage. Now, that would suck, and it would be truly painful to sit through all that, but I think it's worth the risk. And remember, we talked about this as well, that we wanted to see us trade sideways to lower, and then we got to start taking out the tops of our clouds, and we got to get into a sequence here where we have lower prices, higher than lower. Because remember, an A, B, C follows a wave 5, okay? But the question is this 5 done? And as you analyze the short-term structure, we don't think it is, because even with this big, nasty, awful day yesterday, here's what we actually have. We have this move from April 19th down to April 22nd, and this was 35 cents, okay? We traded from 814 down to 780, so I'll call it 35 cents. And what's interesting, and we did that in 1, 2, 3, 4 days. What's interesting here is that the move from last Friday at 824 to Monday's low at 790 was 35 cents. So you have equality in both of these moves. That's a textbook consolidation pattern with an actual completed A, B, C move within this larger wave 5 that's ready, that is likely ready to extend on higher. Now, with wheat exploding higher and pushing, why wouldn't corn do that as well? We've got our RSI and force index trading down to our 0 line. This is another thing that we're looking for, okay? We know that we're above where we were 26 days ago because this line is out in space. This line is a critical line, okay? And what it is a measurement from the high and low of the past 26 bars. And it's just the middle. So it's a really nice way to say, hey, where's relative support? Where's relative resistance going to be if this line moves? And it looks like it's a long way away, right? Because it's all the way down here at 760. But here's the deal. Today that line is being pulled from this low. Tomorrow it moves up, and this line is going to start to curl up tomorrow. No matter what price action does today, this line is going to start curling up. And if price moves higher and we take out this last high, then it's going to pull up like a rocket ship. And when these lines all start to move higher, so you start to see your leading edge tick higher, you start to see your Chiku line blow out and remain in space, you see your 9-day and your 26 bars start to work higher, then it would signal a resumption of an uptrend. So even though we turned really negative the last couple of days, and it's been scary to sit there and watch corn bang around this 26-cent move or whatever, it looks like we're going to work much, much higher. Now, I want to back out here for a second, and I want to show you another reason why we need to be patient with this move, okay? If I'm going to go to a monthly chart, if my chart will let me. Okay, here's a monthly chart of corn. I'm going to clean this up by taking the cloud off. And I'm going to go all the way back to 1970 right here, okay? So this is the monthly chart of corn from 1970 on. And the work that we did on this earlier is we started looking at the all-time highs. Every time we take out an all-time high, how much farther do we go? Remember, because we're sitting right at our current all-time high, right? I mean, 843 is it. 819 is the highest ever weekly close, and we almost got it last week. So if we do break and go through it, where should we expect it to roll? Well, every time that we've done it, the move has been 38%. What's significant about 38% is that that's your first Fibonacci target number. So if we were to break 845, that would forecast a move to roughly 1165, okay, all the way up in here. So it's a huge gain. I mean, you're talking, $3.75, right? So what is it to us to let corn trade back down into 760, 750 in exchange for a move that's all the way up in there? Now, I'm not saying that that's going to happen, but the fundamentals are definitely right for it. In fact, our fundamentals are almost as bullish today as they were bearish here in 2020. And those of you that were with us in 2020 know that that when corn failed to break $3 and work itself lower back in 2020, that was a major buy signal to us, because we turned ethanol off. I mean, our carryout should have gone to 3.5-4 billion bushels. I mean, it should have just been insane, and we should have been well below the cost of production in order to discourage it. But we didn't do that. We turned around and held it and reversed. And so that was a time to adjust and get long right down in here. Well, here, if we consolidate and move sideways and don't break this in the next few weeks, then I think you're looking at the same situation, because at that point you'll have incredibly bullish fundamentals that do not warrant us being at this level. Each one of these was a rationing event, and today we haven't rationed any corn. In fact, we're pushing higher and higher and higher. I was talking to a buyer for a feed yard yesterday, and he expects basis in Kansas to pop another 40 to 50 cents. So we're just not rationing. We're not slowing anything down, not in ethanol, not in exports, nothing. And you've got this lack of new supply coming. So the fundamentals are so bullish, we should break through here, and we should come put pressure on some number, call it 9, 10, 11, I don't know. I have no idea where it'll go, but we should break it. And if we consolidate and fail to break it, then we need to get protection on. But in the nearby, I don't think we have any interest in getting protection. Oh, I guess I should go back to my original chart. I don't think we have any interest in getting protection onto this chart until this stuff rolls over and we start to really do some damage down into here. I think it's worth the wait for the potential 350 move in exchange for a 60-cent risk. Okay, $3 versus 60 cents. To me, that's a really, really good risk reward and warrants being patient. Now, if you've got bushels in a bin and you're not sleeping well at night and you're scared to death that this thing's going to fall away and can't afford the drop, then sell it. Sell it, buy an out of the money call. We can re-own it later. I'm not going to argue with anybody that wants to sell $8 corn or $8.50 in Kansas, right? Take it if you need it, but if you are comfortable and you've already sold enough, then hold. I would not take any action there. Same with new crop. New crop corn, I just have no interest in getting shorted. I think that it's got to go higher. We've got the risk of South America declining another 500 to 800 million bushels out of South America. You've got Ukraine that's off the market, and this market is not priced that in yet. So, I think new crop's got a lot of work to do, and it's got to go higher. So I would not take any action there. All right, now let's spend a couple minutes on soybeans because they've been getting smoked here for the last few days, right? So what do we have? We have a 1, 2, 3, 4, and a 5. Now we're sitting on an A. What follows an A? Well, what follows an A is a B, and that B can get sticky and can move itself on higher as well. So one of the counts that we are that we think we could be in here is we think that this could be a wave 1 followed by a wave 2, just like wheat, which could turn around and explode itself higher. Now, I don't know what's going to drive that because honestly, the fundamentals in wheat and beans are much more questionable than they are in anything else. There's just not the supply shortage that everyone thinks that we're going to have. Everyone thinks we're going to have a ton of acres. Everyone thinks the yield's going to be great. Everyone thinks that South America is going to keep planting, and everyone thinks that all those things are going to happen. But yet here we are holding 1650 beans right down into a consolidation zone. We're right down into a buy zone on our RSI, Force Index, MACD. We're reversing right inside the cloud. If we're able to trade back above 1647 to 1653, then I think that that's going to ignite, and your most likely count here is a 1-2, just like what we think corn is, and just like what we think wheat is. Okay, so that would push this thing much higher. And if beans do that, then I think that they head probably all the way up to 1850, if not higher. What's that based on? It's based on the Fibonacci projections off of this decay right here, and off of this decay here. So if you push those on up, we could easily see that happen. But again, I think corn's got to go in order for beans to do that. So all eyes should be on corn, and all eyes should be higher. And now I'll put in the bearish caveat. The caveat is the Federal Reserve. They have a meeting today, and the market could get pretty goosey with that meeting because if the Federal Reserve raises interest rates more than what the market's expecting in order to combat inflation, then the general wisdom is that that's bullish for stocks and bearish for commodities. So if the Federal Reserve tries to override the fundamental picture of commodities with higher interest rates, then we could invalidate everything I just talked about. We could extend this A here. We can move corn a little bit lower, and we could move wheat lower too. Do I think that that's very likely? We could see a knee jerk, but I think most likely is that the grain markets react quickly and then turn around and start to focus back on fundamentals and start to realize, hey, we can't discount these things too much because we're simply out. All right, I hope that's helpful. I know it's getting redundant hearing us say week after week to be patient, that we don't think this move is done. But to be honest, we just haven't seen any new supply come to market or become more likely in order to change an opinion. And until price action or supply hits this market or we kill demand, I don't see any reason why we would change that viewpoint. So we'll stay tuned to it, and we'll keep you informed. Remember, there is risk in trading commodity futures and options, and you should only do so in light of your own financial condition. I hope that you have a great week. We will talk to you next Wednesday and sooner if necessary. Have a great day.